Today is a Thursday, September 21, 2023. The Pakistan economy's puzzling predicament. A perplexing dilemma has befallen the Pakistani economy. It is trapped in a precarious balance between stagnation and growth, with no clear exit strategy. This intricate situation can only be described as a conundrum. The most tempting recourse appears to be securing yet another multibillion-dollar bailout from foreign sources. However, this would postpone the inevitable reckoning, making the eventual adjustment even more painful. This predicament has arisen precisely because we have consistently deferred the necessary reforms rather than addressing the underlying economic weaknesses. Two crucial weaknesses underpin this crisis. First, there is a relentless productivity erosion compared to our trading partners. Second, there is a fiscal dysfunction wherein the government struggles to generate the revenue needed to cover its expenses. Over the years, successive governments have resorted to borrowing or printing more currency, pushing the country into a downward debt spiral. In 2019, debt service costs surpassed the government's net federal revenues, forcing it to borrow even more to cover its expenditures. For a brief period following 2019, debt service costs decreased due to artificially low interest rates after the COVID-19 pandemic. However, when interest rates had to return to more realistic levels, the harsh reality set in. The economic engine can no longer be revved for growth. Even if a foreign bailout materializes through asset transfers, as contemplated under the Special Investment Facilitation Council initiative, it would provide only a temporary boost. When they run out, these funds will leave a bigger debt burden and heavier repayment requirements. On the other hand, the economy cannot stagnate indefinitely in the face of excessive inflation and unemployment. Neglecting growth only exacerbates the social pressures that could lead to an undesirable tipping point. This is the essence of the conundrum, and no clear solutions are on the horizon. The quest for quick fixes continues. Some suggest rolling back the National Finance Commission (NFC) award to reclaim fiscal space from provinces and stabilize federal finances temporarily. Others propose eliminating corporate tax exemptions, estimated to exceed ₹1 trillion. Another suggestion is to put short-term levies on energy imports, particularly petroleum, to create the framework for future growth. However, none of these solutions are persuasive. Rolling back the NFC award would require undermining the constitution, which is already fragile, and would alienate provinces, weakening the federation. Eliminating tax exemptions would stifle what little private sector dynamism remains and worsen unemployment. Further burdening the populace is simply unsustainable. This impasse calls for a new narrative that is both compelling and actionable. It may assert that the current economic mess stems from interest-bearing relations with creditors, highlighting that a significant portion of tax revenue goes toward interest payments. This narrative could question whether the rulers sought the people's consent before taking on these loans and why citizens should bear the burden of their decisions. It is increasingly difficult to argue that the public should make further sacrifices to honor the government's commitments to creditors when the rulers seem willing to disregard their covenant with the citizenry, as enshrined in the Constitution. These questions could gain traction amid this conundrum, and satisfactory answers are elusive. It is imperative that rational thinking guides the country's path forward. Trust is the bedrock upon which power relies, and when rulers erode trust, legitimacy crumbles. The consequences of illegitimate governance are costly and far-reaching, underscoring the importance of addressing this economic problem with wisdom and prudence. Thanks for watching and subscribing to the channel.